Jen, a lot of people get confused what their monthly payment includes. Some people will ask like over and over again, does this include taxes? Does this include insurance? So monthly payment is made up of principal, interest, taxes, homeowners insurance, and mortgage insurance.
Correct.
How does down payment affect the numbers?
Yeah. So I mean, obviously that is going to affect your numbers. Down payment is directly reducing your loan amount. So you have your purchase price, and you have your little down payment, or you have your big down payment, and then the rest is your mortgage amount. So it's more down payment, less of a monthly payment. Where I run into issues, or I have conversations with clients often is they've spoken to maybe like an online lender or something like that who's out of state. They have no idea what the taxes and the insurance rates are in our state. So they'll run a pre-approval for somebody, say a $300,000 purchase price, and they'll throw in $250 a month for taxes. Well, we all know in the state of Connecticut, there's no town that would have taxes at $250 a month. They'll use $50 for insurance. It's unrealistic numbers. So these people get a pre-approval for X amount of dollars, $400,000, and then their agent isn't comfortable with the pre-approval for whatever reason, which rightly so. They want to know that this client truly can close on a house if they go under contract. So they asked me to take a look at it. We've talked about this before. I'm getting your W-2s, I'm getting your pay stubs, I'm getting your bank statements. I am getting all of your paperwork that needs to be obtained to make a true decision, to make a true determination of what you can be approved for. So now I'm looking at the numbers, and I can only pre-approve you for 300,000 because I'm using realistic taxes. I'm using realistic insurance for the state of Connecticut. And, say you're buying a condo, we got to throw in a monthly homeowner fee in there, which is going to push that payment up. Your credit scores are low. I'm going to use a realistic interest rate. I'm not going to, tell you that the rate is going to be 5%. We know right now the market, the rate is not 5%. They're in the sevens right now. So I'm using all realistic numbers because this is the real world. You're going to make an offer on a house. You're going to use a pre-approval letter, whether it's that person's or mine, and you're going to get an offer accepted. Well, now you have to get a mortgage for that amount. And it doesn't matter what somebody in California used for numbers. We're using real numbers when we're running that. I had a client call me the other day, and I've been working with her for months. She's very sweet, and I know she works really hard. I can tell that she works really hard, and she makes decent money, but she's not comfortable with X payment. She had presented me with a property that she wanted to buy, and she said, can I get approved for this? And I'm like, you know what, you're right there. This is what your payment is. And I believe it was $4,200 a month. And she cringed. She's like, well, no, I don't want to pay that much. I only want to pay $3,600 a month. I'm like, well, then that's going to put you at this amount. And we had a whole conversation about it. And I'm really good about following up with emails so people can revert back. And, I throw so much information at them. And then she responded back and she's like, I think I'm going to talk to another lender because I want to be able to get more of a purchase price for that payment. So I had to have a whole discussion with her that no matter where you go, the payment on any particular house is going to be the same within, $10 or $20, depending on the interest rate, because the taxes are the same no matter what lender you use. Your insurance is the same. Your mortgage insurance is set by the mortgage insurance company, so it's not going to change.
Unless you put a significant amount more down.
Right, which she would have done here or there anyway. So it's the box. You're in that box. You take that box somewhere else, the box is still the same size.
Right, because one of the important pieces of math that we do is saying to them, if you want your mortgage payment to be cut by X amount of dollars,
yep,
you kind of do that reverse math, saying you have to put this many, this much more down.
Right.
And you have to, as the buyer, understand or wonder if it's worth it. When will you kind of recoup that initial investment?
Right.
And sometimes it might just not be worth it.
Correct. Yeah. If people are taking money from a 401k for that additional down and now they're not investing their money anymore, or they have to pay interest on that, well, you have to run those numbers and make sure it's worth it. I get the question all the time, and I think we've talked about it before. Well, I want to put $5,000 more down because I need my payment $200 less. It's not going to change your payment.
Unfortunately,
$200.
it doesn't. It changes it very insignificantly.
Right. It's maybe $15 a month. I don't know the number off the top of my head, but don't drain your money for that extra $10-15 a month.
Right, because this is a long-term investment. This is a 30-year investment. What is $5,000
Right.
really going to do
Correct.
significantly
Correct.
for that
Yes,
large
it's
of a
not
loan?
don't go get your coffee once a week. Make coffee at home, and there's that, additional amount you were just considering putting down. But it is, when you pre-approve somebody, it is not about the purchase price. It's about the total monthly payment. People are like, well, what's the purchase price that I'm pre-approved for? Well, somewhere in this range. It depends on what the taxes and the insurance, and if it's a condo, it depends on what that total payment is, because we're looking at your monthly income versus your monthly debt, and that mortgage payment is part of that monthly debt.
Right.
So I give them a range, and I give them an idea of where I think the payment is going to be. So if they have to, they want to buy a house that's $200,000, an extra $200,000, they have to put that much more down to keep the payment where they want it to be.
Right.
What do I have to change the payment amount? What do I have to change the purchase price? I don't know. Every house is different. This only comes into play when people are really pushing their debt to income ratio.
Right.
Most people don't. Unfortunately, with rates being higher right now, a lot more people are pushing their debt to income ratio because it is more expensive to get a mortgage right now.
Right.
So we are pushing those ratios a little bit more. If you're, you make $1 million a year, you have no debt, and you're buying a $300,000 house, go for it. You don't really need my pre-approval. You're good to go. You can do whatever you want. And I have those people, and I love those people, because, it's an easy loan, but actually I shouldn't say it's easy, because sometimes it's not. Those people who make millions of dollars, sometimes are very complicated with their income. So
right.
Everything has their challenges, but with rates being up, and same client I had, a conversation with, she's like, well, I don't understand why the payment's so high. And I'd already broken it down for her, but she didn't actually look at it. So I wrote it all out. I typed a big email. I got up early. I did a whole email to her. And I'm like, well, this part is your principal and interest. That's your mortgage part. That's your $200,000 mortgage. Then we add your taxes, and then we add your insurance. And she had lower credit scores, but she wanted to buy a condo that wasn't FHA approved. So we had to use mortgage insurance. And honestly, it was outrageous. It was $300 and something for her mortgage insurance, and she wasn't in a high purchase price. So then, her wheels started turning. She's like, "Oh my gosh, you've been telling me all along. Maybe I should just wait a couple months, work on my credit scores, because that will help my payment." And this light bulb all of a sudden went off. She's like, "I need to wait a couple months and get my credit scores better." I'm like, "Yes, your mortgage insurance will cut in half. There's $150
that's
right
huge.
there.
Yeah, that's huge.
That's a huge amount on a purchase price. Let's wait." And I showed her the difference between rates, I hate to do it, but rates 2 years ago versus rates now, and how much that would change your payment. Because she was in the typical, well, my friends bought a house 2 years ago. Why were they able to afford something so much more? Your payment is literally double right now.
What a ridiculous question.
I know.
How are you supposed to even
I know everything. I know everything.
What? Oh, you mean Jane and Mark?
Yes.
As a matter of fact.
I have that.
Yeah. What a ridiculous question.
Oh, Maria, I get that question realtors ask me all the time. Well, why could, the Big Bang pre-approval? I don't know. I don't know what they were looking at. I'm guessing they didn't look at anything. I don't know. I'm telling you what I'm looking at. I'm looking at their documents. I am looking at their credit.
Real time.
Yeah. I'm not making anything up. And I don't know if we've discussed this before or not, and it finally dawned on me maybe about 6 months ago. People just want to get a pre-approval. The younger people I want a pre-approval letter. I just need the pre-approval letter. Just give me a letter, quick. No, I don't need to give you my stuff. I just need that letter. And one day it dawned on me, I'm like, they probably think it's like getting a credit card. You just go online, you put in your name, you put in your social security number, and they're like, you're approved, you're good to go, here's your credit card.
Right.
They don't realize that, you know what, we're going to have to back this up.
Yeah, like a $1,000 credit card is different from a $300,000
right.
mortgage.
But I'm like, that makes perfect sense. That's why they don't realize the importance of actually supplying the documents. They just think they have this letter.
That's a really good point.
They're good to go.
That's a really good point.
But I have a letter.
Yeah.
What do you mean I can't really get a mortgage now? You gave me a letter.
Right.
Yeah. I don't know. I'd like to take a survey, but I won't.
Survey says
you're
an idiot.
No. Just because you have a letter And that's, that's what I tell the agents too. Like, I don't know what somebody else did.
Right.
I don't know what documents they reviewed. I don't know how far they dug in. I don't know what the client told them. I had somebody maybe about 2 weeks ago. He gave me some W-2s. And I'm like, oh, this is cool. He gave me pay stub, showed salary. All right, cool. I can use your current salary because it's salary. Well, and then in the middle of a conversation, he's like, oh, yeah, I'm self-employed.
No.
Stop. Time out. You're paying yourself. We do a 2-year income average. But he had already been pre-approved. Actually, I could pre-approve him for $120,000. He had another pre-approval letter from, I don't know, some online bank for $500,000. I kid you not. And I was pushing him at 120. I don't know where that other lender came up with their information. Even with his W-2s and his pay stub, he doesn't qualify for that. Yeah, go out and buy a house.
We had another, for another loan officer, an unusual circumstance where we were really pushing the DTI, the debt to income ratio.
Yeah.
And the borrower filled out the application indicating he was married, indicating that he had children. When you're a loan officer and you're looking at that, you're assuming
Yes,
that they're
correct.
currently married and the children are
Yeah.
with their current spouse, right?
Mhm.
You wouldn't
Right.
be led to believe otherwise, right?
Right.
Come to find out when the loan officer had the conversation, something about investments, and the borrower said the divorce and child support is really killing me.
Yeah.
What stopped us? Because
Yeah.
now, okay, so you're divorced. So who are the children that you're paying child support? What?
Yeah.
How much are you paying in alimony, child support? This is gonna definitely affect
Absolutely.
the income ratios. Oh, this is different from the monthly payment.
It
kind of
is,
still goes hand in
but
hand though with
it's taking away from that monthly payment that we
exactly.
can qualify
Yeah,
for.
yeah, exactly.
Yeah, and everything matters.
It really does.
It
And
does.
I get to your point. I don't know how big banks operate. I don't know what information they're not getting, whatever, but it's better to get more
Yeah,
information or know
absolutely.
more about the client.
Why spend all that time, agents, just because you have that piece of paper doesn't
mean anything.
mean anything. Make that phone call. Call your lender. I have agents all the time calling me, send me other people's pre-approval letters saying, hey, does this look good? What are your thoughts on this? I'll be like, run away fast, have them get another opinion quickly. Or yeah, you know what, awesome, super solid. They say right on there, they reviewed income and assets, good to go. But you got to do your homework. You're dealing with hundreds of thousands of dollars and you're helping somebody buy a house. They don't know. They have no idea. They buy 2 or 3 houses in their lifetime. They're a first-time home buyer. They have no idea what kind of paperwork we're going to require to make sure they can actually close on that mortgage.
Yeah.
There's both the, to your point on the child support, there's a question when they fill out the application, do you pay child support or alimony? Most people skip over it.
Yeah.
It's huge because it will come up because as part of the underwriting process, we check to make sure
you
there's no
can't hide it.
lawsuits.
You can't.
And there's the lawsuit. It comes up. Yeah.
Right.
Everything matters. Every little thing matters. You owe, past due child support. Oh, there it is on your pay stub.
Right.
The state takes it out automatically. Well,
garnishments.
yeah, well,
like that.
then somebody's like, well, that's just from 10 years ago. Like, it doesn't matter. It's a monthly debt. We have to make sure you can afford the house we're putting you into. We don't want you to fail.
Yeah, that's crazy.
Yeah.
Another misconception, well, not really a misconception, but something that we've been asked, or at least I think recently, is to lower the monthly payment, can we not escrow taxes and insurance?
Yeah.
So, okay, first of all, you have to put 20% down to be able
Correct.
to not do that. But
Correct.
the other thing is, do you really want to have to pay your tax bill twice a year at like $3,000, $4,000 or $5,000 a pop? Like just once?
Yeah.
You know what I mean?
Yeah. It kind of goes hand in hand. If you're like, no, I don't want to escrow because I need my payment lower, you're probably not going to put that money aside to make that payment twice a year.
You're going to forget.
It doesn't really matter. You're paying it no matter what. There's no savings. The bank has to put it in an interest-bearing escrow account. They have to disclose to you once a year what the interest rate is and how much it's made. It's a couple cents, whatever it is. But now it's just part of your payment, so you're disciplined. It's paid every month. But yes, you can waive it, 20% down or more. Sometimes there's a small fee to do it because the bank wants to discourage you from doing it.
Right, because
they
you
want
don't
control over it.
Well, and that's good,
Yeah,
right? Because
absolutely.
the chances that you're going to forget, or the
Yep.
chances that, like to your point, you're not going to save that money.
You're not. And then you're going to
To
like,
pay.
oh crap, and then you're not going to pay it. And, at the end of the day, selfishly, the bank wants those taxes paid because taxes are superior to your mortgage. So if you keep not paying your taxes, the town can foreclose on you,
Right.
and the bank loses their interest in it. Obviously, you get kicked out of your house, but the bank also loses their interest in it. So a lot of people will waive just insurance. You know, they have like a one huge master policy with their homeowners and their cars,
Right.
so they want to waive it. It the insurance company will break it down. It's not a big deal, but that we will do. There's no fee on that, but still, you have to put 20% down. You gotta have insurance on your house. What if your house burns down? You know, people always forget about insurance, and insurance is crazy important. Um, but if people want to do it, they can with enough down payment. FHA never allows it. The theory behind that is it's usually a first-time home buyer, and again, to your point, they're not going to save that money to
No.
make those payments twice a year.
No.
It's not going to happen.
I wouldn't do it. I'd be
I-
like, oh, my payment went down, and I would
Yeah.
totally forget
Yeah,
about it.
and then like knock, knock, knock on the door.
What?
Foreclosure.
No.
Damn it! You can't kick me out.
I own this house.
Yeah.
I make my
I
payment
made my
every month.
mortgage payment. Yeah, thank you for doing that, but we're still taking it away from you.
Yeah.
Yeah.
You're-
Yeah, and I had a conversation with some new buyers a couple days ago, and they were looking at a condo, and she couldn't comprehend the condo fee. She's like, "Well, is that part of the mortgage payment?" I'm like, "It's not part of the mortgage payment. You pay that directly to the association, but it's still part of your monthly housing expense. So there's kind of two buckets. This is what it's costing me to live in this building, but I'm paying them separately, so it's part of your debts."
Right,
just,
we're
like,
showing
qualifying it.
them
Yeah,
it,
we're showing
but-
it, but they pay it directly.
Right.
Yeah.
That does come up a lot.
Yeah.
They get very confused.
Yeah.
But the condo association makes it kind of easier once they get in there. Right?
They
They're
do,
sending
yeah.
them
They
that
send them a bill.
book,
Yeah, they send them a bill or book. Yeah,
whatever.
depending on the association. Yeah.
But I
Yeah.
can see them even freaking out about that. Like, no, this is part of my mortgage payment at that. But I mean,
Yes.
until as
Right,
they've
until
done
they
the first
right.
month.
Yeah,
But
yeah.
I think condo association dues are insane.
Mm.
Insane.
Some of them are crazy.
And it seems like there's no limit. They're
There
like
isn't.
willy-nilly. Like they
It-
can charge you whatever they want. It's crazy to me.
Yeah, I mean they have to like vote on it, but still they can be like, hey, you know what? We got to pay the guy who weeds the yard. It's $10,000. Sorry, another $100 a month for everybody. No, I don't care about the weeds. Too bad.